traders, welcome again to Trader Safari. In today's video, we will learn how to backtest financial markets, most likely Forex. In this video, you will learn how to conduct backtests without using any automated software. We will be doing manual backtesting. We won't use any automated software today, so please like the video, subscribe the channel, and stay to the very end because I'll be showing steps on how to backtest in the end of this video. Let's get down to business. What is backtesting? Backtesting is proving the efficiency of a strategy by using historical data. Through backtest, we get results how the market performed in the past. Therefore, we forecast the future by using the obtained backtest data. Backtesting is practically going back through historical data, trying to verify the conditions, the rules of your strategy, if they are good enough to provide profits for your trading. Therefore, backtesting is such a necessary step in your trading career, and any professional trader should never skip this step. Why is it necessary to perform backtest? If you want to have a profitable trading career, backtesting is one of the things that you shouldn't escape. Backtesting is also important because it's the only way we can verify if the rules and conditions we've created are valid or not. As I said before, guys, when we create a strategy, we don't know how it performs in the market, and we cannot just go ahead trading it blindly unless we have enough data to tell us that this strategy is worth it. This strategy is good enough for us to invest our money in it. Therefore, there's one saying that which says proof equals profit. If you have proof of it, that means it might be profitable. Therefore, backtesting is very important, and that's why it's very necessary that each and every trader should go through backtesting. Benefits of backtesting: have a better understanding of your strategy. When you backtest your strategy, you will gain more understanding of it. You'll know the dynamics of the strategy. You'll know how it works under given conditions. Maybe when the market is trending, maybe when the market is consolidating, you will have enough knowledge on your strategy. You become more confident to your strategy because you now have the data that proves that the strategy is worth it. You'll become more confident to your strategy even if it goes through a period of losses or losing streak, but you will stay confident and trade on your strategy. You automatically develop trading discipline. By backtesting, you become automatically disciplined. You cannot trade against your strategy. You'll stay focused. You'll always trade within your strategy. Also, know the performance of the strategy in each currency pair. This helps you to choose pairs that you will trade. As you know, guys, we professional traders don't just go around trading each and every pair. There are pairs that they are not suitable for certain strategies. Therefore, backtesting helps you to know on which pairs that does this strategy works well on. So actually, backtesting is very beneficial. Aims of backtesting: when we go to backtest, what do we aim? The first aim is to verify the entries and conditions of your strategies. After you've just made your strategy, you have just made your conditions, you made your entries, you also made your rules, but you're not sure if they are working, you're not sure if they can provide profits. By backtesting it, you verify that these entries can work well with my strategies, or you might change them if they're not working well. But how will you know if you won't backtest your strategy? So backtesting is a very necessary step which you shouldn't escape. To know the performance of the strategy: as I said earlier, you can't just invest your cash on your strategy, or maybe on the strategy maybe you just learned from a webinar, or let's say from a YouTube channel. You can't just go ahead and trust it unless you backtest it on your own. That's when you can go down, start investing money on it, and get profits. To develop better ways of trading the strategy: after creating a strategy or learning a strategy, it's not necessary that you should trade it as the same way that you are taught. No, you should go back through backtesting, see how you can make it better, see what can you add, what can you deduct from the strategy to make it perfect for you. We traders, we are of different calibers. As humans, we are not equal. We have difference in opinions, difference in likes. So you might like something else, somebody might like something else. So By backtesting, you can develop better ways of trading the strategy according to how you trade. How to backtest. Now that we know it's very necessary to backtest, let's learn how to backtest. Now that you are aware of the benefits and aims of backtesting, let's learn how to backtest. Requirements for conducting backtest. Before we go to do backtest, there are several things that we need so that we conduct backtest. Have a strategy with clear entries, rules, and conditions. Yes, guys, we should have a strategy, because you cannot go backtesting if you don't have a clear strategy. So first of all, you should have a clear strategies. If you don't, please don't hesitate to watch our previous video, which will be very helpful on creating a strategy. Have a trading platform which allows you to access historical data. We need historical data to backtest, and there are some few trading platforms which provide access to historical data, and I recommend you should use MetaTrader or TradingView, because that's what I use. And have a recording software, because we will need to calculate the data. We should have a spreadsheet. So basically use spreadsheet. If you're using Mac, try to use any program which is associated to spreadsheet. Backtesting process. Backtesting is a process. You cannot just go ahead and skip, but there's process that you should go through when backtesting. The first process is create a rules-based strategy, or learn a rules-based strategy. You should have a strategy which is based on rules, or else you won't backtest. Try to apply the rules-based strategy in the historical data. Simulate that you're trading the strategy, but in historical data. If you're using TradingView, there's a very good tool they have, which is called Market Replay. You can use it to replay the market and try to apply some trades, see how it works. Identify winning and losing strategies. When you're backtesting, you should record both. You should not only record winning trades and leaving losing trades. This is very wrong. You should record both of them, because we will need to know the relative drawdown of the strategy. We will need to know the winning rate of the strategy. So it's very necessary that you record both of them. Record the trades in a spreadsheet and calculate winning rates, relative drawdown, and risk to reward ratio. As I said earlier, we have to calculate so that we know the gains of the strategy, the drawdown of the strategy. So we have to record the trades we get, we record the number of pips we get, we record you might even record the time that you took the trade. So it's up to you. And after that, you conclude. Concluding is finalizing your backtest by writing a report and how you'll trade the strategy. I will show you that later on. Let's continue. Okay, way to go, traders. Things to note while backtesting. Use the same time frame that you use to trade. Before we go ahead backtesting, before we dive deep into backtest, there are things that you should note before backtesting, because your data will highly depend on these notes. The first thing you should note is use the same time frame that you use to trade. Using the same time frame, this means that you will simulate how you normally trade, so having the correct data that you need for the strategy. If you use another time frame, this will cause some misunderstandings in your data, and you won't see your strategy performing as you backtested. So basically, you should go ahead, use the same time frame that you use on your daily trading. If you're using 4-hour chart, please backtest on the 4-hour chart, and if you're using 1-hour chart, please go ahead and do so. Also, obtain as much data as possible. Backtest at least 5 years of historical data. You should at least backtest for 5 years through historical data, so that you collect as much data as possible. You have so much data so that you can calculate the winning rates, the relative drawdown of the strategy across, maybe let's say throughout 200 trades or 100 trades, so you have a clear picture of how the strategy works in a long run, so that you know if you can invest on the strategy for the long run, or you trade it for just a short while. Also, you should record the trades that only meet your entries and conditions. Record all trades, winners and losers. This is also very necessary. You should record each and every trade which meets your entries. As long as it meets your entries, you should record it. It doesn't matter if it's a winner or a loser. Now let's go to the charts and see how we can conduct backtests within a short amount of time. Welcome back, traders. Now that we are in the charts, let's create a simple strategy and backtest as quick as possible. Well, Any strategy should have conditions and rules. Our strategy today, we will be looking for double tops and double bottoms, but we will need to see two conditions. The first condition, the market should be overstretched. This means that the market should be either overbought or oversold. The second condition is that the market should be on a structural level. A structural level is a level which has played a role as a major level of resistance or support. We will talk about that in the coming videos, but for today I think that's enough for structural levels. So let's go ahead on creating the strategy. As we said that we are looking for double tops and double bottoms, good enough, we have a double top right here, but we should have rules for the double top. I personally only have one rule for the double tops and double bottoms, and that is the wick or the body of the second top should never exceed or close above the body of the first top. Let me try to draw a line right here so that I make it as clear as possible. That's how it should be for me. Or this second top should never exceed this line, should never close above that line, because that would signify trend continuation according to my rules. And now that we have the double top rules and everything in place, let us create an entry zone. We can use this lower low, lower close situation right there and make it as our entry zone. We'll say that we will be entering a trade every time we see a lower low, lower close. In this case, we should go ahead and backtesting. First of all, we should try to see if the market is overbought or not. I'll do that by plotting vertical lines through this zone of our double top to see in which level is the market in. As I said earlier, we will use the RSI indicator to know if the market is overbought or oversold. I personally prefer using two levels, 60 to 70. That implicates that the market is overbought, and 40 to 30, that means that the market is oversold. So in this case here, at this instant, the market was in an overbought level. So what we're looking for is short trades. Good enough, we have a double top right there, so we should just go ahead and place a trade. I usually use targets all the way down to the next structural level. In that case, is shown by that orange line, and I put the stop loss slightly above the tops. Let me change color so that we simulate that this is a trade we just placed, because this is a very necessary step of backtesting. You should always simulate as you're placing real trades. That's the only way you're going to be profitable in your backtesting. I mean, you should be effective in your backtesting. Okay, now that we have simulated the trade, we should record how many pips we gained, how many pips we risked, so that we know the risk to reward ratio of the strategy and everything that's concerned with the strategy. Let's go ahead, do that. There we go, we have 50 pips. 50 pips. Just this simple strategy, you could create 50 pips as simple as that. 50 pips, and the market was overbought. All you need is to have rules and conditions in place so that you reduce the number of losing trades. As we will see later, that there are several trades that we will not take them because they do not meet our rules and entry conditions. Delete that. Delete that. It is very necessary that you record, because we will need this data when we try to record this trade on the Excel spreadsheet. So it's necessary that you put there a note so that you know how many pips you made on that trade. We might even try to record the pips you risked. It's all up to you. It's all up to you to see what type of data do you need from your strategy. You can say this 22 pips risk is fine. You can say 22 pips. So we had a risk of 22 pips, but we gained 50 pips. That's how we record. Let's go ahead and find another trade. There are several trades that I pointed out right here. Let us use this one. This is also a very good trade. As you can see, we have this level. All we need to find is a level structure. How do we find it? There's a horizontal line right there. Go ahead, do like this. We should just prove if it has been tested multiple times, and as you can see, it was tested first time here, second time here. When you scroll back, when you scroll back, scroll back, scroll back, scroll back, scroll back, when you scroll back, we have proof that it was tested second time here. At this point, it acted as a support level, so that's a level we should be looking for trading opportunities. There we go, right there. We have our rules in place, everything is in place. We should go ahead trading it. As I said, we should just try to see if the market is in an overbought situation or oversold situation. In this case, we'll try to plot our lines right there, plot the lines, and you see the market is in overbought situation. This zone is the level of overbought. I said earlier from 60 to 70, that's an overbought zone. So the market is overbought currently, so we would actually take this trade because the double top does not violate any rules that we made for the double tops, so it would be a legitimate double top that we would want to trade. So I would basically do that. Let me try to drag these lines away so that I can place the trade a bit clearly. There we go. And we have our entry zone, which is a lower close. Good enough, we have a lower close right there, which is this one. We can use it, all put the trades targets all down to the next level of next level of structure, which is this level. Put it there and put our profits, our losses, stop loss a bit higher from the wicks of the tops. You can choose, you can say maybe like 10 pips above, 20 pips above. You should be more focused. You should be more clear when you're making your rules. Tank properties, go ahead and color that orange red, or yeah, it's just the same. So here is another trade that we just recorded. You go ahead and record it, see how many pips you made, see how many pips you risked. That's how you backtest, guys. That's how you go back through historical data, trying to see how many pips you would have made if you would have been trading the strategy. In this case here, we made 27 pips. 27 pips. Go ahead and do that. That's how I record my data every time I backtest any new strategy. 27 pips. The market was overbought. You might even add any other condition, maybe for a divergence market, but in this case today we will just use overbought situations. So we gained 27 pips in an overbought situation. Now that we have backtested enough, we should go to the Excel to see how we record and how we can prepare the Excel. It's right here, and it should be this one. Yep. As you can see, we have an Excel spreadsheet which is already prepared for backtesting data. Okay, here is where I record the numbers. Here is where I do the calculations of the strategy, the total pips, total wins, total loss, average wins, average loss, everything's right there. And lastly, we have total confirmation of the strategy, the total pips that the strategy makes in the various conditions, maybe when the RSI is in divergence, or maybe when the RSI is overextended. So after performing backtest in the charts, you now record the data in the spreadsheet so that you can calculate and see how you can do it, see how the strategy can perform. And by doing that, you'll be really boosting your trading, because you'll be more confident when you place trades. Let me show you just some of my finished backtest Excel spreadsheets. We can see this one. This is just another strategy. No, it's the same strategy. It's the double top and bottoms. As you see, I just backtested it on the dollar yen, and we have the divergence mode and the overextended mode, which we have 73% winning rate and 82% winning rate. So by doing this, you can know which mode makes more profit, which mode wins more oftenly. So probably backtesting is awesome, because you can see that within period of how many years with this, it was like 7 years, the strategy would make a lots of pips. And I think I recorded around, see, 127 trades, and I'm still recording for more. So probably you should get as many data as you can, and record as many conditions as you want. So guys, that's how you perform backtest. Let me show you just some any other backtest data that I do on my other pairs. See, this is how I backtest. I backtest through a whole lot of period of historical data to see how the strategy performs, to see how the strategy works. Yep. This video is getting a little bit long, so I think we should end here for today. Please don't forget to like the video, subscribe to the channel if you're new here, comment below to tell me if this content was worth it. Tell me what should I do next. Please stay blessed, stay focused, and trade green. Goodbye.